Here's a question that should bother every serious investor watching Aerodrome right now. How does a protocol double its share of all on-chain trading volume in the middle of a brutal bear market and still trade at a fraction of where it stood a year ago? That's the puzzle on my screen today. Aero is hovering near 45 cents, pinned to the exact level that's decided every major move for the past 18 months. And under this quiet chart, something just shifted that most of the market hasn't connected yet. Let me show you exactly what. Let's set the stage. The macro environment is risk-off. Liquidity is thin and most charts are bleeding out. Smart capital stops chasing noise and starts hunting for businesses that actually earn. Aerodrome, the largest decentralized exchange on Base, has quietly become one of the few protocols generating real, durable revenue, handing every dollar straight back to holders. That's why this matters now. The fundamentals and the chart tell two different stories, and the gap between them is where the real opportunity hides. The biggest catalyst is a merger. Aerodrome and its sister protocol Velodrome are combining into a single entity called Aero, built as one unified liquidity hub expanding beyond Base, onto Ethereum itself, and onto Circle's new Arc network. Under the deal, Aero holders receive 94% of the combined token, and Velodrome holders take the remaining 5.5%. That split matters because Velodrome currently trades at roughly a 13% discount to that conversion ratio. That's the kind of structural mispricing larger players quietly accumulate while everyone watches the popular ticker. The merger is just the wrapper, though. The real story is what this protocol earns. Over the past year, Aerodrome generated around $127 million in revenue, and here's what stops me cold. It keeps almost all of it. Compare that to Uniswap, the name everyone knows, which pulled in over $728 million in fees, but passed only about $23 million through to its token. So Aerodrome out-earns the most famous exchange in crypto on actual revenue by a factor of 5, returning all of it to anyone who locks their position. That's the structural shift sweeping DeFi right now, away from inflation-heavy tokenomics toward real cash flow and fee sharing. This is why revenue stayed sticky while the market cooled. There's a flywheel turning underneath. Higher volume drives higher fees, which fund deeper liquidity, which pulls in even more volume. Aerodrome now hosts the single highest volume pool in all of DeFi, plus 4 of the top 10 across every chain. Its volume share doubled this year, climbing from 4% to 10% of all on-chain spot trading. And over 60% of its traders use wallets older than 90 days, with 21% older than a year. This is definitely not a mercenary airdrop money. It's experienced capital that knows where quality lives, sitting on the second largest holder base of any decentralized exchange, ahead of Uniswap. Now the bear case, because protecting capital means seeing both sides. Total fees have slipped from their peak last autumn, and monthly active users dropped from around 600,000 to roughly 274,000. On the surface, that reads bearish. But look closer. A massive slice of new volume comes from a stablecoin Forex layer, where Aerodrome already captured 51% market share with zero off-chain deal-making. Forex is enormous, but thin margin, so it inflates volume while compressing the headline fee rate. The flow is concentrating into fewer, larger, more professional hands. And here's where every thread ties together. The team is launching something called the AER Engine, which flips reward emissions from being counted in tokens to being measured in dollars of value. In plain English, when price is strong, the system mints fewer tokens for the same reward, 320,000 instead of 400,000 in their own example. Less dilution, precisely when it counts. Add final round audits now running with Chain Security and Sherlock on the road to mainnet, plus Grayscale flagging Aero as one of the cheapest revenue-generating apps in the sector, near 4 times revenue while Uniswap sits at 37, and the shape of this trade comes into focus. Now the weekly chart. Zoom out first. Since 2024, Aero has been grinding down a descending channel, those orange dotted lines sloping across your screen. That macro structure is still intact. Price topped near $2.35 in December 2024, then bled to 28 cents by April 2025. That move anchors my Fibonacci, high to low. From those levels, 2 numbers matter. The 236 retracement sits at 76 cents, our nearest resistance, the last major support bulls lost on the way down. Far above, the 618 sits near $1.55. Targets for later. Today's battle is right here at 47 cents, acting as support, with the 10 and 21-week exponential moving averages, the blue and red lines, just beneath helping hold it. But the bigger averages cool the picture. Price still trades below the 55 and 100-week lines, the purple and yellow, so the longer trend hasn't flipped yet. Constructive in the near term, cautious in the bigger one. Below this, 28 cents matters most. The white circles mark the last 3 major bounces, all from that exact zone. There's a second clue. In April, price broke above a descending trend line near 43 cents, that white dotted line, then returned in June to retest it lower, around 33 cents, before bouncing again. That retest and reclaim is what I read as ignition, a structure trying to turn. Momentum agrees. The Heikin-Ashi Relative Strength Index, that smoothed oscillator below price, just crossed up through neutral, with room left to expand before anything looks stretched. Now my own positioning. My core Aero is locked on the platform, earning yield every week, plus more Aero on top. For scale, liquidity providers on the majors there have seen triple-digit annual yields, with some concentrated pools far higher. I accumulated more back in February. My first take-profit target hit at 47 cents in April, and since then price has chopped sideways, even dipping back into my load zone in June before bouncing. That load zone, the green box, runs from 26 cents to 36 cents. That's where strategic accumulation makes sense, not chasing green candles. My take-profit ladder steps up from 47 to 75 cents, then $1.50, then $2.35, and finally $3.60. I manage it with a trailing stop. First target hits, invalidation moves to entry. Second target, it moves to the first. And so on, locking gains as price climbs. I'm not running a hard stop here, because the yield I've farmed since launch already exceeds what I put in, and the position came from a Velodrome airdrop. But if you entered in that green box and want an invalidation, a weekly close below 27 cents breaks the structure. Now let's pull it into a game plan. The bull case is clean. Audits finish, the merger closes, the AER engine cuts dilution, and the market finally prices a revenue machine sitting at 4 times earnings as it expands onto Ethereum. Reclaim 76 cents, and the door opens back toward $1.50. The bear case is just as real. Volume keeps rising while fees keep falling, and price bleeds through that channel back toward 28 cents. Here's the single pivot the whole thesis turns on. Right now, the protocol still emits more value than it earns, a ratio sitting around 1.68. The AER engine exists to close exactly that gap. Push emissions below revenue after launch, and a 4 times multiple becomes indefensible. Fail to, and this stays a low-margin volume grab. The backtests give me comfort while that resolves. Holders who entered and held through the right windows won over 90% of the time, and fees alone added more than 60% since April. The data showed holders were paid while they waited. So here's the thesis in 3 lines. Aerodrome is winning almost every metric that doesn't pay you yet, and quietly fixing the 2 that do. The merger, the audits, and the AER engine are the catalysts that could flip it. And the chart is coiled right on support, waiting for the market to notice. My honest take, after years of doing this, is that boring cash-flowing protocols survive the bear and lead the next leg. If this breakdown sharpened your thinking, hit like, then subscribe so the next setup finds you. If you want to go deeper, this is exactly the kind of execution I run inside the Pro Capital Vault, my private community for serious position traders. In there, you get my real-time portfolio, the precise accumulation and take-profit zones, weekly live strategy calls, the Sunday prep report, exclusive videos, and direct access to me. It opens through YouTube membership on this channel. Just tap the join button below, use the link in the pinned comment, or scan the QR code on screen. Once you're in, sync your YouTube account to Discord, and every private channel unlocks automatically. One question for the comments. At what price does Aero become a clear accumulation for you, and why? And if you missed it, go watch my last Aerodrome video, where I walked through the February accumulation that set this whole position up. None of this is financial advice. It's my analysis and strategy, nothing more. Always do your own research, manage your risk, and let the data lead. I'll see you in the next one.